Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It's April 26th, Monday morning, 2021, and we have a ton of stuff going on this week. Probably the biggest, most exciting earnings week on top of the FOMC this week. Just every big stock you can think of this week is reporting, and we're going to start out with the big one, the one that is on everybody's mind every day. I actually just found out Elon Musk is actually hosting Saturday Night Live coming up soon. And as a native New Yorker, of course, I'm glued to Saturday Night Live every week. Although now that I'm older, I watch Saturday Night Live Sunday morning with coffee. I guess that's that's a sign of the gray hair. But anyway, we're going to use recent price action history to talk about trading Tesla. And when I mean recent, I'm talking about literally last week. We're going to talk about the Snap earnings. We're going to talk about the American Express earnings, how they both kind of traded in the opposite direction of what you would have anticipated them doing the day that the earnings came out. And then they started to move a little bit. And here's the key that I want to actually, you know what? We'll come right back. I just want to get this up on the screen and we'll go straight into it. Okay, so the big thing I want to talk about is if you can imagine these big earnings coming out, these big announcements coming out. We even saw this in Netflix. So this is kind of like an earnings trade lesson, for lack of a better way of putting it. And then we're actually going to jump right into lessons that affect this week. We got a really good question from a member of our bootcamp community. So anyway, imagine earnings come out, whether it was Netflix earnings, Snap earnings, American Express last week. You have this big hedge fund and you just have to do something because you need to be allocated, right? Earnings come out. How many shares do you think you could possibly allocate after that earnings comes out? Like literally as soon as it comes out? Not really that many, not anything in a significant way, because the stock's going to react very quickly off the earnings. Your entire team of researchers are obviously going to know what you expect prior to it happening, but then there's the price action. Then you need to start building or getting rid of the shares based on how the earnings come out. And more often than not, that's over the next day or two. So just think about that. We had Netflix come out, get pounded that first day, and then the next day was a really good trade. American Express, and we'll take a quick look at that chart. American Express came out. Earnings weren't what they expected. It was actually down, I think, 5% at one point in the morning, and then slowly started to grind back higher during the day. Snap earnings were actually good, and that slowly ground down during the day until it finally caught a bid, and we're taking a look at that today. So what does all that have to do with Tesla? We'll take a look at Tesla first. We'll start out with that. We'll give everybody the meat and potatoes of what we want to talk about today. We'll take a look about an article reviewing what expected from Tesla today from Investors Business Daily. And then we'll see where Tesla is resting, which has been the big level that we've been trading it every day in the boot camp. So let's actually head on over to the chart. Actually, the news story first, and then we'll head on over to the chart. And you can see first here that it's resting at 700, but I want to start out here with Investors Business Daily. This is the big thing. They have it at a buy point, and their buy points are very wide windows. They're usually looking to allocate shares within a very wide window. But here's the big thing. Expected to report a huge first quarter earnings gain late Monday. Everybody's expecting this. It's kind of, I don't know if it's necessarily priced in because the stock really hasn't moved. Normally, when you say something is priced in, it's actually done this. It's rallied a certain amount of time and maybe rallied 2, 3, 4 weeks into the number. We really haven't done that. But what we have done is we're sitting right here at the 700 level, which has really been the big level. If you could see the line that we drew, got up there, and you hear, if you actually attend our game plan meetings in the morning, so you got up there, you'll hear me say, it failed, it failed, it failed, it failed, it failed, it failed. Don't get involved where it keeps failing. And we finally got above it, and now we're holding it. So we're holding the 700 level, and that matters. So what are we looking at right now? Honestly, I actually think it's going to have a really good earnings. I think that it's going to pop to the upside. And I think that this 850 to 875 level is in play. Now, here's the difference between an active trader and somebody who's guessing. That's my game plan. That's what I'm expecting to have happen. If it doesn't happen, I just let it go. I got a couple of really good comments, questions, however you want to word it. We talked about American Express last week, and we said it was looking like it was lining up to have a surprise bullish announcement, expecting the stock to rally, as some of the other financial stocks, specifically Goldman Sachs did. And we're actually going to take a look at DFS, Discover Financial Services, yesterday, which is near a buy point for us as well right now. Traders set if-then scenarios. It doesn't mean we're doing it no matter what, unless price action and the tape and volume confirm what we see. So American Express opened lower on Friday. We just left it alone. There was really nothing to do. I don't fight the tape, and neither should you. Our job is to set up a bias. Our job as active traders is to set up what is probably going to happen next, but then do what we know exactly that we're going to do. Now, that sounds a little bit wordy, right? So what's probably going to happen next, but what you definitely are going to do. So if we expect something to happen and it does, we take action. If we expect something to happen and it doesn't, we just leave it alone, and then we go to look for another idea. So everybody that either emailed me or messaged me or wrote a comment, it's a really good question. What do you do if here's the really thing. People, I'm not predicting. I don't like to predict. I look to set probabilities, and then if the probabilities unfold, then I take action. And this is actually a really big thing too to know for your daily and weekly game plan. It's a really important point. Most traders, new traders, struggling traders, somebody who's not really making money yet, they create this game plan and have maybe, let's just say 5, just to keep the number simple, 5 stocks going into the day. And whether you're a day trader or a swing trader, let's just say the same thing. It doesn't matter. Doesn't matter if you're going to hold it 1 day or 10 days. You have this list, right? You have this list, and let's use an extreme example. Only 1 out of the 5 stocks do exactly what you thought. And here's it drives me crazy. They're like, 4 stocks didn't do anything that I expected. It was a bad game plan. It didn't work out. But 1 did. 1 did exactly what you thought it should do. That's the one you should have printed money in. Who cares what the other? Who cares what American Express did on Friday? It opened lower. I let it go. I'm expecting Tesla to have good earnings after the market closes today. If it does, I'll be all over it. If it doesn't, all right, whatever. I don't care. There's plenty of other opportunities. So remember this. Your job is to create your trading game plan. It doesn't matter if you're day trading stocks or swing trading stocks. You head into the week, you head into the day, and say, these are the stocks that are probably going to do X. You might have 8 stocks. You might have 5. It doesn't make a difference. You only need 1. You leave the other ones alone. You only need 1. Now, look, I talk about this all the time in our community. I'm trading a long time. This is actually my 21st year anniversary as a trader. I don't like to trade stressful anymore. I like it to be stress-free. I don't want any more gray hairs. I like it to be stress-free. So when I create a game plan, whichever stocks do what I think, I trade. The other ones, I just leave them alone. I don't microanalyze it to death and be like, why didn't it work? Why didn't it follow through? I don't care. I only care about the ones that follow through. And that's all you should care about too. So whether it's trading the open and feeling confident, trading for the week and feeling confident, just focus on the ones that are doing what your game plan said they should do and leave the other ones alone. Which takes us into today's questions. I'm going to actually go over, we had some really good questions from the community. It takes us actually right into my bias for the week. It takes me into what I think is not really the greatest situation from last week heading into this week. We had that sandwich where we had a really great Wednesday, a really crappy Thursday, and then a really awesome Friday again. But there's something going on that I'm looking at. And again, this is building the argument for the idea, which is something you should learn how to do. Now, if this is all new to you, you can definitely get all of my ideas. You can get all of my ideas sent right to your phone. Just click the link below the video and learn more about it. Everything, it couldn't be easier. You earn while you learn, getting all sent to your phone. But here's the question. And I know I've talked about this a little bit recently, so we're going to actually go right over here. This came out over the weekend. It's from Shambu, one of our members of our community. Basically he's asking, what do you do when the market's not obvious? Because we talk about the market, we talk about, as he says here, the big 4, you would say, right? The SPY ETF, the NASDAQ, looking at the Qs, the diamonds, the Dow Jones Industrials, and the IWM. Those are usually the big 4. What do you do when they're not obvious? Because every place you look at is talking about the market did this, the market did that. But what if the market's not obvious? Well, we already talked about it. I'm going to come back on the screen, and then we're going to go back over to the images. You build a foundation for a great argument. Remember this quote. You want to pause this and stop it. And if you have questions about it, definitely leave a comment below. You're building a great argument on a solid foundation. And that starts with, is the market obvious? William O'Neill from Investors Business Daily said that 37% of all stocks move with the market. So it's you should look to see, is the market obvious? So you start out with that foundation of the market. Then above the market, you have individual sectors. So you have the market, you have the 11 major sectors. Then within those sectors, you have industry groups. So for example, technology and semiconductors, right? The market, sectors, industry group, and the stock. So to answer the question is, and actually let me pull the question up so you can see it again. What if the market's not obvious? You work your way up, and now you look to the industry, the sectors for obvious. Then you look up industry groups. So you can have the sector. And for example, I'm going to show you the sectors in a second, which has me a little bit on pause. And then we're going to take a look at the individual stocks, which is what we have here. Let me actually, excuse me. Let me just pull that up. So this is the sectors for coming into today. So that's Friday was amazing. This was the performance of the major sectors last week. So we had real estate and healthcare, the only two that really did something significant. So coming into the week, what does that mean for you? How does that give you a mindset for coming in and accepting risk this week? What does that do to you? Well, I'm going to still keep my position sizing down a little bit until that picture clears up. Friday's price action was amazing. For the week, not so much. So what am I thinking? This is where experienced traders start to get a feel for the market. I don't like that. It's not what I want to see. I wanted to see over the week that we had good follow through. So right now, that means now I'm going down into healthcare stocks is what I'm looking at. Basic materials were strong. Energy stocks were really weak. So now I'm going to get back to the question, going to stocks, the market, the sector, the industry group, and then the stock. So this week, heading into the week, and this could change, but heading into the week based on game planning, healthcare stocks are going to be what I'm going to be watching. I might be short selling energy stocks, and I'm going to be paying attention from sector to industry group, semiconductor stocks for some shorter term day trades because they've extended just a little bit. Okay. And the last thing I want to talk about is if you happen to be an active day trader right now, you definitely want to screenshot this. This is about as perfect of market internals as you could possibly see to be really aggressive as Friday afternoon allowed you to be. On the top here, we have the VIX. On the bottom here, we have the ticks. These are the two primary indicators that I watch during the day. When the VIX is going down, that's bullish for the market. Fears coming out of the market. The tick indicator measures upticking stocks versus downticking stocks during the day. And you can see here I have the zero line outlined. That means that at this particular point, there was never a preponderance of downticking stocks. They never went below zero. So that means that the buying pressure and the lack of selling on Friday, combined with what the VIX was doing, should have been a very aggressive morning for you on Friday, and quite honestly, throughout the entire day. So what does that mean? Again, building arguments for great trades, whether you're day trading stocks or swing trading stocks, you need to know this and this and this and this. Those are reasons that you accept risk because that stacks the odds in your favor. Again, if you want to learn how to do this, just click below the link. I'd love to see you on the other side. So we have Tesla. We're going to take a look at Tesla. We just gave you healthcare stocks as a sector. Possibly short selling energy stocks today and looking for follow through on semiconductor stocks. We talked about Discover Financial. Let's actually hop on over to that. We'll give you a few more ideas for today. So DFS. Okay, you can see now here's the thing about Discover Financial. We actually rallied and failed. Rallied and broke out and failed. And now we're actually about ready to hit the rally button again, right? I want to see at least 2 days of closing above 104. Oracle, the stock that was on fire for a while, right? Good 3-week period here, pulled back. We talked about it on Friday. Hopefully you're aware of this. We talked about we were looking for a reversal. We were looking for it to open lower, push lower, reverse, and have a snapback trade. Now it's actually traded back into and above Thursday's low, and we're looking for follow through here again today. Remember, this is the game plan. After the market opens, then we have different plays. SKLZ is in my watch list again today. You know, this was the Kathy Wood big purchase last week. We are now looking after, again, consolidation, looking for it to expand, consolidation into that inside day. Home Depot is another one. Obviously, Home Depot has been one of the strongest stocks, but I want to get into SKLZ again. We are waiting for it to break this trend line. It's still pretty strong to the downside. There's the Cathie Wood news behind it. This is a pretty solid setup, which actually brings us to another one. And I really don't like talking about these stocks. These are the meme, the Reddit stocks. MVIS just exploded for 36 and 30, over 36% on Friday. $18 has been the level we've been watching. It's actually now close to 20. It should be in your game plan today if you are an active trader. All right. FOMC this week too. Keep that in the back of your mind. I just want to make sure that I cover a couple of other ones. Snap, we are looking for follow through. Okay. Again, Snap had earnings, opened higher, pushed down, and fought back. This is what I'm talking about, what I said at the beginning of the call. Okay, let the funds, let the smart money, let the institutions finally start to work their magic in the positions that they have, their deep pockets, step back in, and now we're looking to see more of this today. Okay, whether you're day trading or not, it doesn't make a difference, right? Two more that I want to talk about are DHI. Okay, good, clean, bullish gap on Friday, looking for follow through, and net. Now, the reason I want to point out net, this chart doesn't look anything like, wow, why, right? But if you remember, if you're a regular subscriber to the channel, you look at this, and we noticed this last week, and we said, keep this on your radar. Something's going on with the stock. Read the tape. Wait for it to break out of 77.50, and it was good for almost $5 just in one day on Friday on the breakout of the 77.50, and you had plenty of time to get this trade off. Okay, you could see here plenty of time in the morning. As a matter of fact, it gave you two optimal entries here earlier in the day. So obviously the big thing, we're also talking about the crypto stuff that's going on, obviously taking a shellacking last week, and now crypto is traded into a really good clean reversal over the weekend, which means that we might be looking at some of these beaten down stocks. Mara, which traded into a bullish U-turn, and Riot. Again, Aldo is our big crypto expert in the community, does a really good job of calling out the levels and VWAP and everything like that. So Aldo, thank you so much for that during the day. And that's what we got today. So it is going to be an amazing week of volatility. FOMC midweek, we're going to sandwich that in there. We covered a lot of stuff today. Definitely go through this, watch the entire thing, click pause. If you have any questions about the lessons that we gave today, definitely click down below and leave a comment. I get back to everybody. Definitely give us a thumbs up. I really appreciate that. It also helps me know what you like to watch, which is a big deal. And set the alerts. When you subscribe and set the alerts, and you'll get notified about anything new that we put out there. So have an awesome day. Have a great mindset for this week. Keep in mind what I said about the only two sectors having a pretty decent week last week, which is healthcare at the top of that list. And if we start to roll over, I'm going to be looking to short sell the energy stocks if we roll over in that sector, as well as something to keep an eye on, some of the cruise lines, Norwegian Cruise Line, NCLH, CCL, and RCL also popped last week too. So we're going to keep an eye on those too. So have a great day, everybody, and I'll speak to you soon.